Have you ever done the work? I mean, really done the work. You spent hours marking up the levels. You waited patiently for days for price to hit your point of interest. You were a sniper. Price finally gets there. The candle closes perfectly. This is it. But instead of clicking the button and executing your edge, you take a screenshot. You send it to your friend or your Instagram group or that Discord channel full of strangers. You wait. You hold your breath. You're looking for someone, anyone to say, yeah, that looks perfect. And while you're waiting for that thumbs up emoji to tell you it's okay to be a trader, the move leaves without you. Or worse, they tell you it's a bad idea. You skip it and then watch it hit take profit from the sidelines. In this video, I'm going to explain the 6 major reasons why this exact habit is the reason you are still unprofitable. We're going to deconstruct your psychology brick by brick. And you need to stay until the end because reason number 6 is going to hit closer to home than you're ready for. Let's get into it. You are outsourcing your conviction. The first reason is the most brutal, and it's a pill that most traders are too weak to swallow. You don't actually believe in your system. Let that sink in. If you truly, deeply believed in the edge you claim to have, you wouldn't be looking for a second opinion any more than you'd look for a second opinion on what your own name is. Pro traders don't look for second opinions or confluence from the group because they understand a fundamental truth that the amateur brain rejects. Trading is a game of probabilities, not certainties. They aren't looking for a win. They're looking for a sample. When a pro sees their setup, the specific alignment of price, time, and volume that they've seen 10,000 times before, they execute without a flicker of hesitation. Why? Because they have a casino mindset. They know that out of 100 trades, this specific setup wins 60 times and loses 40. To them, the result of the next trade is completely irrelevant. It is a single data point in a lifetime of execution. They don't need this specific trade to be right. They just need to execute the process so the math can do its job. But look at what you're doing. When you screenshot that chart and send it to your inner circle or your favorite Discord alpha, you're trying to do the impossible. You are trying to turn a probability into a certainty. In your mind, you think that 5 people agree with you, the trade is somehow safer. You think that 5 yeses increase the odds from 60 to 90%. But that's not how the market works. The market doesn't care if 1,000 people agree with your buy signal. The market will move toward the liquidity regardless of your group's consensus. Let's use a real-world example to show how ridiculous this behavior is. Imagine a professional poker player sitting at the final table of the World Series. He's dealt pocket aces. He knows the math. He's a massive favorite to win the hand. Does he turn to the guy sitting in the audience and ask, "Hey man, I have aces. Should I bet?" Of course not. He would be laughed out of the room. He knows the math. He knows the risk. He accepts the possibility that he might still lose the hand, but he executes because his edge demands it. By asking for permission, you are making a loud, clear confession to the universe. You haven't done the backtesting. You haven't spent the hundreds of lonely hours in the simulator to see your strategy fail and succeed enough times to trust it. Because you haven't seen the data, you're trying to substitute social proof for statistical proof. You're trading on borrowed confidence. And here's the problem with anything borrowed. Eventually, it has to be paid back. Borrowed confidence always defaults the moment the market gets volatile. The second that trade moves 5 pips against you, you'll panic. Why? Because you didn't enter based on your conviction. You entered based on theirs. And since they aren't the ones feeling the heat of the trade with you, you'll close it early or move your stop, and you'll find yourself back in the same cycle of frustration. If you can't take the trade alone, you're not trading. You're just following. And followers never lead the way to wealth. Let's talk about the hidden cost of your insecurity. Seeking validation isn't just a bad habit. It is literally a tax on your brokerage account. Every second you spend seeking a second opinion is a second where the market is moving away from your ideal entry. In this game, price doesn't wait for your friends to finish typing. By the time you take that screenshot, crop it so it looks pro, upload it to the group, wait for the notifications to pop up, and finally read the comments saying, "Yeah, bro, looks clean." The window of opportunity has slammed shut. You're no longer entering at the point of interest. You're entering at a worse price. You're chasing. You are sacrificing your risk to reward ratio just because you needed a security blanket to wrap yourself in before you felt brave enough to engage. Think about the math of that delay. If your strategy requires a 10 pip stop loss to target 30 pips, that's a clean 1 to 3 trade. But because you waited for the all clear signal from a Discord moderator, you entered 5 pips late. Now your stop is 15 pips and your potential reward is only 25. You just turned a professional grade setup into a mediocre retail level gamble. You are paying a validation tax with every single trade. And over a year, that tax is the difference between a funded account and a blown one. But it gets even more dangerous than just a bad entry. Pro traders realize that alpha lives in the quiet, uncomfortable moments. Alpha, the edge that allows you to beat the market, exists where there is disagreement, not consensus. If you post a chart and everyone in the group agrees that it's a perfect setup, you shouldn't feel confident. You should be terrified. Why? Because if everyone sees it, everyone's in it. And if everyone's in it, who's left to keep buying or selling to push the price in your favor? When a trade becomes crowded, it becomes the primary target for institutional liquidity hunts. The big banks and the algorithms don't look for perfect setups to follow. They look for perfect setups to trap. They know exactly where the herd puts their stop losses. They know that a group of 500 traders in a Telegram channel all have their stops tucked just below that obvious support level. By waiting for the herd to validate you, you aren't finding a safe entry. You're literally volunteering to be the liquidity for the slaughter. Pro traders operate in the shadows. They enter when the move looks scary, when the candles are aggressive, and when the rest of the world is too paralyzed to act. They don't want your agreement. In fact, if too many people agree with them, they start looking for the exit. Stop joining the herd. The herd exists for one reason: to be consumed by the lions. If you want to eat like a lion, you have to learn to hunt in the dark long before the rest of the world sees the light. Validation is a hedge against responsibility. This one is going to leave a mark. This is the psychological basement that most of you are hiding in, and it's time to turn the lights on. You seek validation because you are looking for a hedge against responsibility. Let's be brutally honest. Taking a trade completely on your own, based on your own analysis, your own risk parameters, and your own execution is a terrifying act of vulnerability. Why? Because if that trade fails, there is nowhere to hide. There is no guru to yell at. There is no Discord group to commiserate with. There is no one to point the finger at but the person staring back at you in the mirror. And for most people, the ego is too fragile to handle that. When you take a trade because the alpha in your group said it was a god-tier setup and it hits your stop loss, your brain does something incredibly clever and incredibly dangerous. It shifts the blame. You tell yourself, well, it wasn't just me, even the pro got it wrong. The market is just manipulated today. The news was unpredictable. By sharing the trade, you've effectively diluted the pain. You've spread the failure across a group of people so that it doesn't feel like your failure. You feel like a victim of market conditions rather than a student of a mistake. This is emotional hedging. You're trading your potential for wealth for the comfort of not feeling like an idiot. But here's the secret of the top 1%. Pro traders have total, radical responsibility. They don't just accept the blame, they crave it. They want the loss to be 100% theirs. Why? Because if the loss belongs to them, then the lesson belongs to them too. If a pro trader loses because they misread the price action, they can go back to the charts, study the tape, and fix the leak in their boat. They can adjust their edge. They can grow. But if you lose because you followed someone else, you can't fix anything. What are you going to do? Study their brain? Wait for them to get better? You've put your financial future in the hands of someone else's growth curve. When you share the responsibility of a trade, you are literally throwing away the only thing that makes a trader successful. The market is a feedback machine. A loss is just the market saying, your thesis was incorrect in this environment. But when you seek validation, you muffle that feedback. You drown it out with the noise of the crowd. You're like a student who cheats on a test. Sure, you might pass today because you copied the smart kid, but when you're standing alone on the trading floor and the smart kid isn't there,
you'll realize you're illiterate in the language of price.
Reaching the emotional climax. We are building the tension toward the final point, the one that connects the trading screen to the viewer's entire life. If you want the profits of a pro, you have to have the spine to own the losses. You have to be willing to stand in the wreckage of a failed trade, look at the stop-loss hit notification and say, I did this. I saw it wrong. Now let me find out why. Growth doesn't happen in the we. It happens in the I. If you can't handle the weight of being wrong by yourself, you will never have the strength to carry the weight of being a multimillionaire by yourself. This is perhaps the most invisible way you're self-sabotaging. When you seek validation, you aren't just looking for confidence, you are accidentally polluting your edge. I call this the Frankenstein effect, and it is the primary reason why good traders stay break-even for years. Think about the room you're in when you enter a Discord or a Telegram group. Every single person in that chat is looking at the market through a completely different lens. It's like a room full of people wearing different colored glasses. One person is wearing red, one is wearing blue, and one is wearing green. You might be a supply and demand trader. You'd spotted a beautiful 1-hour reversal. The structure has shifted, the imbalance is filled, and your plan says buy. But before you click that button, you check the group. The top trader in that group, let's call him the Trend King, posts a chart showing he's looking for sells. Now your heart sinks. You think, he's more experienced than me, he must be right. But what you're failing to realize is that the Trend King is a trend follower on the 5-minute chart. He's looking for a 10-pip scalp on a minor pullback, while you're looking for a 100-pip reversal on a major time frame. He isn't saying you're wrong, he's simply playing a completely different game. But your brain doesn't see the nuance. Your brain interprets his no as a verdict on your yes. When you seek validation from a crowd, you are trying to find consensus among people who aren't even using the same dictionary. You end up with a Frankenstein strategy. You take a piece of ICT's concepts, you mix it with a little bit of support and resistance you heard in a chat room, you sprinkle in some RSI divergence because someone on Twitter mentioned it, and then you wonder why your equity curve looks like a heart monitor in a horror movie. There is no consistency in a Frankenstein strategy, and without consistency, there is no data. Without data, there is no improvement. Pro traders stay in their lane with a level of discipline that borders on religious. They have strategic tunnel vision. They don't ask a marathon runner for advice on how to sprint, and they don't ask a scalper for their opinion on a swing trade. If a setup meets their specific criteria, the criteria they've spent months backtesting, it doesn't matter if the rest of the world thinks the market is going the other way. In fact, the best trades often look the wrongest to everyone else. If you need the group to agree with you, you are essentially saying that your strategy is a democracy. But trading is a dictatorship. You are the leader. You are the general, and you are the only one who knows the specific why behind your execution. By letting a random guy in a group chat influence your entry, you're letting a stranger reach into your wallet and take your money. Stop trying to blend the world's opinions into your plan. A perfect setup that doesn't fit your edge is a bad trade. An ugly setup that fits your edge perfectly is a professional trade. If you can't look at a chart and trust your own eyes over 1,000 voices, you will always be a slave to the sentiment of the crowd. This section is crucial because it addresses why traders feel confused despite knowing so much. We are building the narrative that the noise is the enemy. The dopamine trap. This is the biological glitch that is keeping you stuck in the beginner's loop for years. You have to understand that your brain is a survival organ, not a profit-maximizing organ. And right now, you've become addicted to the like more than you are addicted to the profit. Think about the physical sensation when you post that screenshot. You found the setup. It's clean. You feel that surge of excitement. You post it to the group, and within seconds, the notifications start rolling in. Fire setup. Clean levels, bro. I'm in with you.
Psychologically, getting 10 people to tell you that you have a great setup releases the exact same neurochemicals as a winning trade hitting take profit. You are getting a pre-win hit of dopamine. You are satisfying your brain's biological hunger for success before the trade has even been executed. This is where it gets dangerous because you've already received the emotional reward, the social validation. Your brain feels satisfied. It thinks the job is done. The tension that is required to manage a trade with discipline evaporates. When you're already high on the approval of your peers, you lose your edge. You become lazy. You stop monitoring the price action for signs of weakness. You stop trailing your stop loss according to the plan. Why? Because in your mind, you've already won. You've already proven to the tribe that you're a smart trader. But the market doesn't pay out in likes. It pays out in cold, hard equity. Pro traders operate on a completely different emotional frequency. They find absolutely no joy in being right in the eyes of others. In fact, they usually find it annoying. If a pro trader posts a setup and everyone agrees with them, they don't feel a dopamine hit. They feel a sense of caution. To a professional, a validated losing trade, a trade they sought a second opinion, got it, and then lost, is a double failure. It's a failure of the system and a failure of character. But an unvalidated winning trade, a trade they took in total silence that no one else saw, that went against the grain and hit TP, to them, that isn't a moment to celebrate on Instagram. It's just Tuesday. They find their joy in the process. Their dopamine comes from the click of the button at the right time, the discipline of the stop-loss placement, and the silence of the room. They don't need a digital pat on the head to feel like they belong in this game. They know they belong because their account balance says so. If you are trading for the clout, you are just an expensive hobbyist. You are paying the market to feel important for 5 minutes in a Discord chat. But if you want to be a professional, you have to learn to starve your ego. You have to learn to find your satisfaction in the shadows, where the only thing that knows you're right is the withdrawal slip from your broker. Reaching the emotional climax. We are building the tension toward the final point, the one that connects the trading screen to the viewer's entire life. 6. The childhood approval ghost. We've peeled back the layers of your strategy, your timing, and your brain chemistry. Now, we're going to peel back the skin. This is the reason I told you to wait for. This is the reason that will explain why you can be a genius in every other area of your life, yet act like a helpless child the moment you open a chart. The reason you cannot click that button alone, the reason you feel that physical tightness in your chest until someone else says go, is because you are still the kid in the 3rd grade classroom looking at the teacher for a gold star. You have to understand that since the age of 5, you have been systematically programmed to believe that success is synonymous with permission. You were taught that being right meant your work was checked by an authority figure. You were taught that to be safe, you had to be part of the group. If you colored outside the lines, you were corrected. If you had a different answer than the rest of the class, you were shamed. You've carried that ghost into the most cold, indifferent, and brutal environment on Earth, the financial markets. But here is the paradox that breaks most people. Trading is the first time in your entire life where there is no boss, there is no principal, there is no parent, there's no one to tell you that you're doing a good job. It is just you, the math, and the void. And for a good student, for someone who has spent their whole life being a good boy or a good girl, that level of absolute freedom is utterly terrifying. You aren't looking for validation because you're a bad trader. You're looking for validation because you're scared of being the odd one out. Deep down, you are terrified that if you're the only one buying while the experts are selling, if you stand alone in your conviction and you end up being wrong, you'll be cast out of the tribe. You're seeking a teacher in a Discord chat because you haven't realized that in this game, you are the teacher, the student, and the exam, all at once. Pro traders have committed an act of ego murder. They have killed the child inside them that needs a pat on the head. They have realized that the market is the ultimate anti-authority. It doesn't give a damn about your effort. It doesn't care if you follow the rules of your community. It only rewards independent, cold-blooded risk-taking. Every time you ask, "What do you guys think of this setup?" you are effectively screaming to the world, "I am not ready to be an adult yet. I am not ready to own my destiny." If you want the wealth that only 1% of the world possesses, you have to be willing to do what 99% of the world is too scared to do. Be wrong by yourself. You have to be okay with the silence of the room. You have to be okay with taking a loss that nobody else took. And you have to be okay with taking a profit that nobody else saw coming.
The day you stop sending screenshots to your friends is the day you finally start your career as a trader. Until then, you're just a student waiting for a bell that is never going to ring. So tomorrow morning, when price hits your zone, don't open the chat, don't refresh the feed. Just look at the chart. Trust the ghost of your back testing and click the button. Be a man alone. Be a woman alone. Because that is the only person who ever makes it to the top.